what you do when you create an excess amount of something, so let's say iron ore in Australia, if you pull too much out of the ground, demand collapses. I mean, you've got too much supply, so prices fall, right? So if you create too much supply of a currency, and we see it because the banks are hoarding this stuff, the price of the currency falls. Now, we grew up in a world where the Aussie dollar goes up against the US dollar or goes down, or the euro goes up against the Aussie, right? That's the relative valuation. But Australia, New Zealand, Japan, Europe, the UK, Canada, the US, they're all printing money. So what happens is the value of all of these currencies falls together. So you're like, well, how can that work? Surely one has to go against another. No, they fall against things of scarce supply. Gold, Bitcoin, real estate, equity. Those are why these things go up so much. It's the value of the denominator goes down, fiat currency. So if you ever look at the chart of the Venezuelan stock market, it's the best performing stock market in the world and has been forever. It's not. That is priced in Bolivar, but the currency keeps devaluing about 70% a year. When you put it into US dollars, the stock market's gone down a lot. This is what is going. So the central banks around the world, the G4 big central bank, are printing currency at the rate of about 15%. So your hurdle on your investment is now 15% a year, or you're getting poorer. I.e., you can afford less of a house or less investments every year and crypto is one of the only things that outperform the central bank balance. So I checked this and looked at real estate prices in Germany against the ECB balance sheet. Flat. They're the same thing. Well, German real estate looks like it's going up. Swedish real estate, UK real estate, Australian real estate, Canadian real estate, US real estate. What they're doing is reflecting fall in the value of the currencies created by the central banks creating currency. Point being is I'm not sure that when you open the curtain, it's not the Wizard of Oz. The man behind the curtain, the guy doesn't actually know what's going on. And I don't think they know how to control it either. We kind of are where we are. We've got the world's most indebted economies. What would any of us do? What are you going to do? Raise rates and destroy the economy? Let inflation run and destroy the debt, or debase your currency? Well, you'll try and do as much as you can of not letting it blow up. So you'll just keep printing money, buying assets, don't allow recessions. Whatever you do, don't let the collateral go bust. And that's my view. And because it is risky in the way that it's volatile. So it's not a risky investment. It's not going to go bust. It's volatile, but you get more than compensated for these big price swings by the price rising, because the cycle tends to see like a 70% downside and a 10x upside every few years. So you get more than compensated for the risk. But people aren't used to taking risk anymore because the central banks stop anything bad happening or anything else. But yes, if you've got the longer term time horizon, buy this stuff, and when it sells off, you buy more of it and just hold it as you would do with gold. So I advise an elderly Italian who is a very famous large family office in Italy. And he's the patron, 86 years old, and he loves gold. His crypto are now larger than his gold, and risk adjusted, they're like 4 times. Now, he's a cool guy and he likes trading. But if an 86-year-old Italian who's, a very famous guy has put most of his kind of liquid net worth in it, you understand that it's robbing gold, because he's a classic gold investor. He's a classic gold investor. So if you extrapolate the numbers, we will get to 1 billion users.
1 billion users
by 2024.
Well,
we will get to 4 billion users by the end of the decade.
Could we see governments around the world try to halt this crypto madness?
I don't think they can, because it is decentralized. There's no company to sue. There's nobody to go after. So the only people you can go after is your own citizens for owning. Yeah. If I'm right and we go up far and as fast as I think we're going to go, I think that ship sailed. Probably sailed about 2 or 3 years ago, where they could have done something about it. I think it's almost impossible now because of the speed of adoption, how many businesses, how much capital is in the space, they would even dare to do it. And don't forget, in the US alone, the largest part of the voting population is now the millennials. What are you going to do? Tell them they shouldn't have the upside?
No, they love this stuff. They love it.
And guess what? They're voters. There's no way they can stop.
Well, the central bank, they've lost power. They've lost bank fees. They've lost many things. This is a problem, Rob. This is a big problem.
So what do they want? And I've thought long and hard about this. What do central banks and governments act? Governments want one thing and one thing only: their fair share of the tax. We've got open economy, so I can send money to you as much as I want. You could send it to me. And as long as we pass AML and KYC, nobody cares. Right? Because we've got open economy. So they're not worried about us moving money around. What they want is, if I'm making money, I should get charged capital gains tax on it. If I'm making income or interest, I want to get paid income tax on it. And they don't want you to keep that out of the system. And that's fair enough. right? So that, I think, is the battle. The central bank don't want to lose control of the banking that they oversee because they think control is the right thing. They will put a set of controls around some of this, but they can't around all of it. So they'll try and restrict some use, some. There is a battle to have.
But Raoul, the big secret, the magic formula, the magic sprinkle, the dust, is because it's not regulated. That's what's made it special. If it gets regulated, will they take the magic away?
They can't regulate what it is. All they can regulate how you use. So I don't think it's easy in this digital world where we can operate freely in ways that we want to make it that easy to stop, let's say, us borrowing and lending or investing in crypto. And I don't think that that is their ambition. But there's this thing called DeFi, decentralized finance, that is rapidly going to disrupt the banking. They're going to worry a hell about that because they can't control it then. Why do the central banks need to control banks? Well, banks are risky and they blow up, so we need to control them, right? Well, they still blow up, even with these people controlling them, so that doesn't really help. But they also do that because banks are the way of using monetary policy. Central bank cuts interest rates, the bank pass it on, that all works. So how does that work with this new decentralized world? Well, they don't know. The answer? That's why they're building these central bank digital currencies, because then they can work in this world too. So if they want to give you a higher rate of interest than me, they can. Or if they want to give you a stimulus check and take tax from me, they can do anything they want with this new formula. So it changes how monetary policy works. And I don't think we'll just see this cutting of interest rates or printing of money as the way that the central banks operate. So I think everything's changed.
What would you say to, I'm going to say to the baby boomers.
So the baby boomers have a very unique problem. Because of the advancement in science, healthcare, and all of these things, nobody knows how long they're going to live. And the probability is they're going to live longer than they think. And that means, do you have enough savings? Right? That's the only question for baby. So, okay, if you want to insure against the risk of your longevity, which is obviously the thing you want to celebrate, then if you were to allocate 5% of your portfolio to cryptocurrency, just 5%. So let's say Raoul is an idiot and it all falls 50%, you lose 2.5% of your net worth. You don't even notice. If I'm right and it goes up 20x from here, 50x from here, doubled your net worth. So that allows you to live another 20 years. This is why it matters to baby boomers. It is the greatest policy against not having enough retirement savings because you're going to live.
But as you said earlier in the show, and it is going to rise and it is going to drop again. So maybe there needs to be a psychological approach that you've got to be aware of this. It's a little bit crazy town, but it's a new norm.
So when you talk about rise and fall, people are going to think we're talking about oil prices that do this. No. What we're talking about is a rise and fall in an exponential trend. So even though it's fallen 70%, that was on the back of a 10,000% move. And then it goes up another 5,000% and falls another 70%. What you're doing is going up in this big volatile trend. But the biggest trend of all, price rises are exponential. So what it means is you need to have a longer term time horizon. You don't get in this to think I want to get rich in a year, because if you get the wrong part of the cycle and it goes down, you're going to have taken too much risk and you're going to feel terrible. If you say, you know what, if it falls, I'll add a bit more if it falls down, because we know where the trend is going. We know that all of this adoption is happening and we know it's volatile. So we should use the falls in price to our advantage. And once you get that mindset on, the buy the dip mentality, you'll succeed.